On behalf of ICICI Securities, pleasure to welcome you all to Sheela Foam Q4 FY18 and Annual FY18 Earning Conference Call. We have with us on the call Sheela Foam Management, represented by Mr. Rahul Gautam, Managing Director, Mr. Dhruv Mathur, Chief Financial Officer, and Mr. Tushar Gautam, Executive Director. Over to you, sir.
Thank you, Anand. Thank you very much, and welcome to all the participants. So good morning, ladies and gentlemen, once again. This is Rahul Gautam here, and along with me is Tushar Gautam and Mr. Dhruv Mathur, our CFO. So as Anand has said, we are here to present the results of Q4 of FY18 and the annual results of FY17-18. So let me just begin with by saying that the quarter has, on a standalone basis, has been quite respectful. We had a 12.3% growth on the top line, and on the bottom line we of course had a very high growth that was almost about 118%. Primarily because in the last quarter of the Q4 of FY17, I remember in our annual call I had mentioned that because of the demonetization effect, we sacrificed some profit and said that we must try and get back our market share. So the entire focus was on the top line, and we did succeed to great extent on that. But the profits are low, and therefore the high growth in the profits as far as the Q4 18 is concerned. On a consolidated basis, we have again about 11 to 12% growth on the top line and a 92% growth on the bottom line for that quarter. Coming to the annual results, so on a standalone, we have a 13.2% growth on the top line, and we have a 13.5% growth on the bottom line. On the consolidated basis, the top line growth is 11.2%. That is 1976 we have achieved this year, and 1776 was last year. And on the PAT, we achieved 134 crores compared to 126 before. So that's a 7% growth. It is a little bit lower than our expectations, primarily on account of the raw material upsetting prices which kind of continue. And there was also about a 5 crore loss on account of the GST starting and our exempted unit in Kala, not getting the entire exemption, but getting only 58% as committed by the government. This actually brings us to the raw material side. So there is no doubting that this high price of one of our major raw materials, TDI, continues to adversely impact us, both in India and Australia. However, recently it has started receding from a high in the quarter of 335 rupees, and now it is down to 290 rupees, which is actually a 15% fall. We are also tracking this now a little more closely. So earlier we just sort of looked at it more at a macro level, looked at it as a phenomena which would kind of be there for a while, like it happens in most commodities, and but somehow it didn't kind of go away. So we have a little deeper understanding of the global capacities and the target and the largest consumer, China, which has been there. So the capacity, the nameplate capacity that was existing was about 3 million tons. However, for most of the year, about 0.9 million tons was out of action for some reason or the other. And of course, they were across the globe, and they were for varied reasons, right from a gas leakage to a fire to a force majeure closure on account of environmental issues, etc. Of late, as we see, 50% to 60% of the capacity which was absent has come back. And over and above that, 2018 has added about 0.6 million tons extra. So if I look today, the demand is about 3 million tons, and the capacity that is existing is well over 3 million tons. It's about 3.2, 3.3, going up to 3.6 when everything kind of comes on. So all indications are that now the time has finally come when this should be southwards. But as I said, we can only prepare for it. We can do nothing more than probably just pray that this kind of goes away or gets back to its normal levels of what we believe should be today around 200, 225. And I'm saying this even with the increased oil prices that we look at, which is about $80 per barrel, or we look at the dollar, which has also gone up, which has gone up to about 68 rupees. However, both these things are not responsible for the huge or the high price, and the price should come down to about 225, between 200 and 225 very soon. It brings me to a subject which is the event which has happened last year, which is the GST. And I would say that the demonetization and GST are behind us, and demand is picking up. I'm not saying that the GST is fully implemented. Probably it was a little naive on our part to assume that in such a diverse country, in such diverse circumstances, especially in India where there is also diversity in tax compliance, that big events like this would happen overnight. Or for that matter, if an e-way bill comes, everything will get kind of sorted out. But our understanding of the market and the industry is that people have found ways to negotiate or to navigate through this process. The industry, the commerce has found that, and therefore is now kind of settling down, and demand is beginning to pick up. The big thing that was related with this was, of course, the unorganized shifting to the organized side. I can only say there are some green shoots at the moment, but eventually it will happen. And some of these processes are also, there are political compulsions that you cannot go hard then, or you cannot go very hard as far as implementation of all this is concerned. So keeping all that in mind, I think it will take its time, but it's beginning to happen. As far as we are concerned, we've said that the unorganized to organized will be driven by the GST at a pace which is decided by the government. However, we can drive this unorganized to the organized through our efforts, and which is really the brand awareness and all the promotions and advertisements that we can do. We have begun on a good footing as far as this year is concerned. I'm also happy to convey that the industry has followed it up, which means that the mattress industry has a larger share of noise or music, as you would say, in the communication industry and the advertising industry. Okay, there was one more topic which I had intended to talk about, which was on the dividend part of it. Like always, or like last year, we are aware that there is considerable cash which has been generated and will continue to be generated. The board, which had its meeting on the 18th of May, extensively debated this issue of distributing dividends. The board also took notice of the fact that even a large dividend would be relatively insignificant compared to the share value, and the real return would be in the further increase of the share value. The board also took cognizance of the fact that 85% of the shareholding is still with the promoters, and as in the past, their preference has always been to support and promote growth. The board then discussed all the opportunities that were available for growth, which definitely are overwhelming, more so now that the economic conditions are becoming more and more conducive, and effects, as I said, of DMON and GST are of the past. The entire board then concluded that the company must put all its might behind growth only, both inorganically and organically. Inorganically, as we have discussed or I have communicated in the past few conferences, there have been some of the M&A opportunities of last year, and I confirm that a few of them continue to be on the table, and there is a fresh one that has emerged. However, we have also decided now to act proactively in this side and solicit the inorganic opportunities rather than just wait for them to come. On the organic growth side, once this inorganic to the organic transfer begins to happen in the market, we suddenly realize that the market size is no longer just 3.5 thousand crores, but is actually closer to 10,000 crores, because the unorganized side will also add to that, which of course means that we have to find ways to cater to that. We have already begun doing that through two introductions of products. One, Starlight, which is for the lower level, and then for the mid-level we have Sheela Foam. We will not, for the organic growth, we will not wait for GST, as I already mentioned, to push this, as we all know that it may take a little more time. However, we will continue to increase the promotion and the advertising, and I say it that this year has started with that and is already showing good results. We also have taken a call to invest into capacity and for improving both serviceability as well as capacity, that once we take cognizance of the fact that the market size is not 3.5 but is 10,000 crores. So as probably mentioned before, about two possible units, we now make them into 2+2. So 2 units will be enhanced in capacity and 2 fresh ones will be not held back anymore for the M&As to happen or for the GST to kind of happen. One more market which we have been pursuing is really the furniture market, and that's the second largest market after the mattresses. So, which has been unorganized before. We have begun doing our bit, organizing it, making products which are far more conducive for the entire segments, starting Karigar programs, which are the influencers, and also reaching out to small furniture makers and having some kind of association with them so that the consumers get better products. And this market, which has been completely unorganized, begins to take some form and shape and grow. It is true that not much growth has happened in the year which has gone by, but the potential for that has not gone away, and it has only pent up further. So with all these pushes and the other steps that we intend taking, we hope to see a great year as far as growth is concerned. We just want to add one more thing from our side. During the IPO process and subsequent investor calls, we had communicated that Accenture had worked with us and produced a 4-year plan right up to March 2020. Just about a month back, we have now got Accenture on board to not only for the preparation of the plan, but for the implementation of the plan. So they are here with us, and jointly we would be pursuing all the opportunities that we have. I have one more last part to add, which is the CSR activities of the company. We take them very seriously, and recently have added to our role of skill development, or to our initiative of skill development. We've added an academy which prepares both boys and girls, young boys and girls, for entry into the armed forces. And this is a project which has just begun and has met with a lot of enthusiasm and hopefully with a lot of success. So I am now ready to take any questions that you may have. Thank you very much.
Sure, thank you. We will now begin the question and answer session. Participants who wish to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Nihal Jam from Edelweiss. Please go ahead.
Hi, sir. Good morning and congratulations on the good set of numbers. So just starting off on the quarter, could you give us a sense of what the price and volume breakup would be for this quarter and for FY18? Meaning looking at the standalone sales here.
Yeah, Nihal, thank you very much. So Dhruv will take that question.
Nihal, good morning.
Good morning.
The growth has been for the quarter, corresponding quarter to this quarter. On mattress section, there has been very good growth on volumes. The volume growth on mattress has been 12% to the corresponding quarter, largely because of introduction of low-price mattresses. And the price growth has been 9%. This is as far as the mattresses is concerned. However, the foam side, there has been some degrowth in the quarter, largely because those foam core, which we have been talking, are shifting towards mattresses. So there is some degrowth in that. And there's a price growth of 11% in foam. So overall, if you see the overall situation, there is a growth of 12.3% in value, which can be divided around 4% in volume and 8% in value growth.
This is for foam.
This is for?
Quarter 4.
Quarter 4, that's right.
Okay, for the foam segment, it's 4% volume and 8% value.
No. For the foam segment, the price is around 11%, and there's a degrowth of 5%, primarily because of foam core shifting to mattresses.
Okay, sure. Sure, sir. So secondly, on the TDI outlook, you mentioned that current capacity, I think, stands at around 3 million tons, and I think that includes the new capacity of Sadara that's come on board of 300,000 tons. And the demand is 2 million tons, which I guess would have been more or less stable over the last 3 years. So despite, say, these dynamics being in place, and I'm guessing oil may have not changed too much, why is it that there has been such a sharp increase which has happened in TDI then over the last few years?
So the global growth is generally about 4 to 5%. That's just to say that it's absolutely not been stable, but about a 4% annual growth that the globe experiences. The nameplate capacity has been about close to 3 million tons. Out of that 3 million tons, I said 0.9 million tons has been going on and off for different reasons, various reasons. Sometimes has gone away to the extent of about 0.6 or 0.7 million tons. Now all that is kind of coming back, and those reasons were, as I said, gas leakages and fires and force majeure conditions because of environmental issues, etc. All that is beginning to come back. So the 3 million tons at the worst time was down to about 2.1, 2.2 million tons, while the demand was close to 3 million tons. Today, that 3 million tons is there, plus 600,000 kilotons, which is 0.6 million, has been added. And what we should by August or July or August should really be having a capacity of 3.6 million tons and the demand being about 3 million tons. That's the equation that we should be having. Even today, if I was to look at the capacity which is actually in operation to the demand, the capacity is far more. And therefore, it's just that little cusp when the switch should take place.
So consistently over the last 3-4 years, you're saying that 0.9 to 1 million ton of capacity has not been available. So you've had more or less a scenario of demand being equal to the supply in this market.
So 2 years. 2 years, yeah.
Okay, sure. So just one last question on the acquisition that you're mentioning. We expect that it's going to be in the mattress segment itself, or are you looking at certain ancillary opportunities, and any ballpark on what could be the potential you're ready to spend for these acquisitions?
So Nihal, I would say it is in the mattress side. Mattress is the accessory side. But it's just a little premature for me to, sort of say anything more. A little premature.
Okay, sure. I'll get back in the queue for further questions. Thank you so much.
Thank you. The next question is from the line of Amar from HDFC Mutual Fund. Please go ahead.
Yeah, hi. Thank you. Good morning, sir.
Yeah, good morning.
So could you share with us the number of mattresses sold for Qtr4 and for full year FY18 in India?
Yes. Can I?
Yes, sir.
So we have sold for Qtr4 3,14,000 mattresses, and for the year 11,40,000 mattresses.
And out of this 11,40,000, how many could be Starlight?
So they would be in the vicinity of around 45 to 50,000.
And what is the value of mattresses sold in FY18 in India?
The value of mattress sold in FY18 is 696 lakhs. 696 crores.
Net sales value.
That's right.
Okay. And so lastly, in your opening remarks, you spoke about starting new units, 2 new units, and also doing some capital expenditure or expansion in existing units. Could you elaborate on that a bit more, please?
So I go back to the times of IPO or a little after that, and we had identified 2 places for absolutely new units. And those were somewhere a little on the hold because of some big acquisition possibilities which have not gone away, but definitely the timing and all that is not in our hand. So today we have taken a call to say that we will not wait for, as I said, for these acquisitions to come through. They will come when they will come, and at the same time not really wait for the for the GST, so to say, that the unorganized completely switches over to the organized side. We will go ahead with this in this year itself. I have mentioned this before, that a new unit generally costs about 50 crores for us, which is the land, building, plant, machinery. And as far as the expansion in the other two units are concerned, that should be of the order of about 20 crores each year. So this spread, besides the capex maintenance that we have, or the maintenance capex that we have, this should be an additionally about 140, 150 crores.
That's it, sir. Thank you very much.
Thank you. Next question is from Ritesh Chadda from Lucky Investments. Please go ahead.
Yeah, sir. For FY18, if you could...
I'm sorry, Mr. Chadda, we can not hear you very clearly. Could you please speak a little louder?
Clear now? Hello.
I request you to use the handset.
Is it audible now? Hello.
Yes.
Yes.
If you could give for FY18 the volume and price-led growth, on your standalone numbers, and specifically for mattresses separately, or mattresses plus foam care separately.
So I will give you all. First, you listen for the mattresses. The volume growth was 3.6%. Last year we sold this 11 lakh, and 17-18, 11 lakh 40,000. And as far as the foam is concerned, there was hardly any growth because most of the foam core were being transferred to low-price mattresses. And as far as the price is concerned, on the bedding side, that is mattresses, growth was 3%. On the foam side, it was 18%.
So pricing growth was 3% on mattress.
It's because of the introduction of low-price mattresses that the overall average went down, despite some price increases which we took last year.
And foam was 12%?
18%.
18%. Okay.
Yeah.
The foam care part of the business and the furniture cushioning part of the business, the nature of the business would be B2B or B2C?
So as far as furniture and foam core is concerned, it is like B2C because it is sold all through distributor dealer channel network to the consumer. It's only the technical foam which is sold to the industry, which is on B2B basis.
The consumer here who eventually buys is a final consumer, or it would be one of the sofa manufacturers who will buy it?
So it's actually a bit of mix. I mean, the process is like this, that an individual person who gets his sofa refurbished gets hold of a karigar or an influencer who then arranges or facilitates the foam part of it. The decision making is by the consumer, but there is an influencer who's there. That is one part, which is the refurbishing. Then there are these smaller furniture makers where they specify to the consumer that the cushions used are of Sleepwell or feather foam, and which enhances their value. So again, the consumer takes cognizance of the functional part of the sofa, and therefore the consumer is involved in it.
Okay. Next, I wanted to understand what, in your opinion, would be the mattresses market growth in FY18?
I can... FY18?
Yes. So where we grew about 3% in volume and about 3% in pricing, so about 7%, correspondingly, what would have been the market growth?
So, as far as, of course, we don't have any proper agency which kind of tracks this or collects data, but all the feedback that we have from co-manufacturers and co-suppliers to the site, it would have been also over 3%, 3 to 4%.
Okay. And lastly, the pricing on your product line would be indexed to what TDI price? So are you covered for the existing TDI price?
So the existing TDI price is 290. We are covered up to 280. So
up to 280. So the last price increase that you took was at a TDI price of 280.
That's right. But we have taken a recent price increase. I mean, that's relevant in this quarter, effective from 15th of May.
And what is the extent of pricing increase there?
5%.
Okay, and including that, you say you're indexed to RM of 280, or excluding that you indexed?
Excluding that.
Okay, excluding that you're indexed to RM of 280, and then afterwards you've taken 5% price increase.
Correct.
Okay, thank you and all the best to you, sir.
Thank you.
Thank you. Next question is from Varshit Shah from MK Global. Please go ahead.
Hi, thanks for the opportunity. So I just want to understand what is the maintenance capex for FY18. Or is there any expansion or related capex which is already done? Part of it is done.
So I would like to answer this question. See, the maintenance capex last year was around 40 crores.
Okay.
Yeah. Then we have bought some piece of land for around 4 crores. And then we are starting foaming process in Siliguri, for which we have incurred 8 crores.
Okay.
Right. So.
Okay. And so what was the volume growth for April and May? I mean, any indicative number? And also my another question is, what is your expectation or internal estimates for that, TDI prices for the whole of FY19? If there is any internal estimates you're working with, something like that.
So look, as far as forecasting TDI prices for...
No, I understand it's a lot of factors involved, and you have already elaborated on the capacities and how it's playing out, but still anything probably, it should average out at X level, or probably, or the trajectory, you have already explained that should be around 200 or 25. So probably you expect that to...
I would make a wild guess that it should be between 250 and 260, something of that order.
For the whole of the year, average it out. So basically you're expanding 225 by end of FY19 sorts.
Yeah.
Okay. And as I said, any indicative number on the volume growth till now, in the quarter? Till April, May, how's that been? Because you mentioned that it's been a good start for FY19. So is the volumes, any number on the volume side? Indicative range is also, so it's fine.
So it's value-wise, I'm aware right now, which is around 12% for these 45 days. Out of which, since we have not taken much price increase, logically it would be driven mostly by volumes.
Okay, understood. I think that is from my side.
Thank you.
Thank you. Next question is from Parthav Chontra from NVS Brokerage.
Yeah, hi, good morning, sir. Hello.
Good morning.
Good morning, sir. Good morning. Sir, you mentioned about the Accenture being partnered with you. Can you just throw some light on it? What are you looking into it? Like, what is the entire, how you have structured the entire thing?
So when, just about 2 years back, they had helped us to draw a 4-year business plan. They studied the industry, they studied our position there, and they drew up that plan. Now we have asked them to join in the implementation of that plan. So they are on a retainership plus an incentive basis, and their team is positioned here, and our team and their team, we are kind of working together on all aspects of the business, which is the front end as well as the back end and the organization. All 3 ends, they are working with us.
So nothing is basically concrete as on date, any opportunity?
No, this is, the opportunity is existing within the business.
Okay. Now, I thought it's something which is outside your business.
No.
Okay. And something on the TDI front, I know you answered that you cannot give a range, but what would be the comfortable range giving the price increase? What would be the comfortable range, like maximum you can take a cover up for the TDI price increase?
So, Dhruv, you want to answer?
Yeah, it's while increasing the prices by 5%, we have covered up to rupees 300.
So, okay, anything above 300 is bad and anything below that is good for the company.
That's right.
Okay.
Vis-a-vis today's situation, yeah.
Okay, all my questions have been answered. Thank you so much and best of luck, sir.
Thank you. Thank you very much.
Thank you. Next question is from Sandeep Agarwal from Naredi Investment.
Hello.
Hello.
Good morning, sir. So my question is regarding capital expenditure for the financial year 19 and 20.
For which year?
So for next year, 18, 19 and 19, 20.
See, it all depends upon the timing of, as the chairman has just told, that we have to put in 2 more plants and some capacities are to be expanded. So it's a function of timing. Our normal capex, maintenance capex is in the vicinity of 40 crores. As far as these 2 plants and the capacity expansion is concerned, I cannot predict the exact timing because that will depend upon location and all that, identification of location, etc. So you can expect, let's say, if you assume out of 150 crores, 50% will go this year and 50% next year. So let's say 100 crores this year and almost the same number next year, including maintenance capex.
Okay. Thank you. So my next question is regarding investment of the 60 crore as a current investment and 37 crore as a non-current investment. Any details?
That is just treasury management. That is as good as cash in bank balance.
Okay. Thank you.
Thank you.
Thank you. Next question is from Pawan Kumar from Unifi Capital. Please go ahead.
Yes, Mr. Pawan.
Mr. Pawan Kumar, your line is in talk mode. You may go ahead with your question. There seems to be no response from the line of Mr. Pawan Kumar.
Hello.
Yes, please go ahead, sir.
Sir, I just wanted to understand what are the kind of revenues that we are presently making from the furniture segment part of the furniture foam that we actually supply, and how big is that particular market, and how much of it is unorganized? What is the opportunity?
We are looking at about
18% of our total revenues, 18 to 19% of our total revenues are coming from furniture and about the market.
So that's about 350 of that order, 350 crores. As far as the market size is concerned, our estimate is that it's probably we would be addressing just about 2 to 3% of the market. I mean, if you really look at the entire market of the country. But of course, there is a lot of it which is unorganized and there is organized. We don't have any formal numbers. As far as our research is done, it's a continuum between the organized and the unorganized. So really to cut a point and say that this is the market, it would be tough to do that. Yeah.
But would it be fair to assume that here in this particular segment, the growth can be in range of some 20-25%?
Absolutely. The growth that we have also at least internally thought about is of that order. And it will only be based on the organizing capacity and based on reaching out and having products which address the those ends of the market or the lower ends of the market. And therefore, it should be much higher.
But what would be our strategy? Because the thing is, from what I understand, most of this business is done by the karigars, and they would rather prefer to be sourcing the material from unorganized suppliers themselves. What will actually make them switch?
So you're absolutely right that the karigars, or as we call them as tarkhans in this part of the world, they are the ones who influence the decision. So we have a program in place called Anmol Bandhan, which has been there for the past 3 years, where the karigar is registered with us and the dealer from where he picks up the material. He accumulates points and is then rewarded. We have regular meetings with these karigars. Currently, they are of the order of about 25,000 of them, which is an increasing number. And, we train them, we tell them about qualities of foam, we tell them about how to even upholster. All those programs are already in place. So that's one end part of it. The other is that there are people who are small manufacturers of furniture, and we have begun partnering with them to ensure that the product, of course, the timber and the upholstery is decided by them, but the contents, the functional part, which is the foam part, that is from Sleepwell, and for that to be displayed so that the consumer gets confidence that the product is good. So that process has begun recently. The Karigar one is on for 3 years. And as I mentioned to you, 25,000 and a number which is growing by the day.
Okay. And one last question. Technical foam, what is it as a portion of our revenues, and how is it different from the traditional foam that we actually manufacture? What are the applications?
So traditional foams have cater to basically cushioning requirements, which is comfort and support. So whether it's a bedding or it is furniture, it's a combination of comfort and support. That is what traditional foams do. Technical foams have this plus 1 or 2 critical parameters which makes it different. So for example, we would have sound absorption as a technical foam. Now the sound absorption are used in these canopies which are around generators and in recording rooms and all that, which is to absorb the sound and make a generator a silent generator. Similarly, there would be a requirement like for shoes and lingerie. There is a requirement that the foam needs to provide comfort and support, but also needs to be UV stable, because with sun, foams tend to yellow up, and if the textile is white in color, it will show up. So we have special characteristics imparted to the foam. Those are foams which are known as technical foams. They are also foams which are used for packaging, which do not, impact the packaged contents. For example, electronic items. There should not be any static charges produced in the foam, and it provides the cushioning that is necessary. So we have anti-static foams for that. So there are these special grades of foams which are used for applications which are little beyond just comfort and support, and that's why they are called technical foams.
Okay. What would be the size proportion of our revenues right now, and what
around 20%?
So it's 20%, and yes, 20%.
And which is manufactured in Australia?
No. It is manufactured in India. It is manufactured here. Generally, we do not exchange foams because foam doesn't travel very well. It's very expensive to transport from one place to the other. So we are completely equipped to cater to the needs here, and in Australia, the supply is from Australia itself.
Thank you.
Hello.
Before we take the next question, we'd like to inform participants that in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. Next question is from Ritesh Chedda from Lucky Investments. Please go ahead.
Yes, sir. If you could, share your outlook on the technical foam side and the Australian business side, for the next couple of years. And second, in the Accenture mandate or, Accenture help, what are the key target areas and key milestones that, Sheela Foam has set for itself over the next 2 to 3 years, if you could, spell out something?
Okay, as far as the Australian side is concerned, it's a pretty stable business in a matured market, primarily supplying to the bedding side, the furniture side, and the technical foam side. However, we are the largest manufacturer, and just because we are completely focused onto foam manufacturing, we continue to grow with time, but albeit that the growth is small. I mean, so a 3, 4, 5% kind of growth, both in Australia and in New Zealand.
You have a plant there, or you supply from India?
No. So as I have mentioned a couple of times before, foam is very difficult to transport because it's a very voluminous item. Therefore, we have plants in Australia. We have actually 5 plants across Australia because Australia is also a large, almost a continent. The distances between one city to the other are large. So we have 5 places where we do Qtr4 to our customers: Perth, Adelaide, Melbourne, Sydney, and Brisbane, and a place in New Zealand, in Auckland. So the Australia and New Zealand markets are similar and catered by us there. So there the growth forecast is about 5 to 6%, as time kind of goes by, because it's a very stable and a matured market. Coming back to your question on Accenture, so they had helped us to make the 4-year plan, which is improvements the entire value chain, starting from inputs, manufacturing, value additions, front end, newer markets. All those things were already identified 2 years back, and now some of them got implemented in the 2 years that went by, but some of them have still to be, and they would be working along with us to do that.
Any goalpost on margins and the size of business that you want to attain post the Accenture engagement? Any milestone, any KRAs which have been set in, and if you would like to share on it?
So we had actually shared it at that time. The EBITDA is to go up to about...
Gross EBITDA level, including other income, was to go up to 17%, which was earlier around 12%.
Excluding or including other income?
Including other income. Now, since we became listed, now we are focusing on the core EBITDA. So the core EBITDA has to go up to around 16%, 15.7%. Yeah.
This is excluding other income, right? 16% excluding other income is a target.
That's right.
This is at the console level?
This is for the India level.
India business.
Yeah.
And any other targets on the size of the business?
So we have set up the target for around 3,000 crores in the next 2 years.
Okay.
Yeah, that is 31st March 2020, the top line to be 3,000 crores. NR, net revenue.
Okay, and how are we moving towards achieving it?
So we have the number of the year ended 31st March 2018, and the very purpose of engaging them is to reach to that number.
Sir, on the India business side, where you're about 1,700 crores, hello?
Yeah, that's right.
To move from 1617 to 3,000, what all needs to be done in the operations? And where are we?
So I think that's very long answer to be given on this call. You can talk to me offline and I can answer all the measures to be taken for achieving that.
Okay.
Thank you. The next question is from Priyanka Khandelwal from ICICI Prudential Mutual Fund. Please go ahead.
Hello, sir. Thank you for taking my question. Can you help us with the average TDI prices in FY17 and FY18?
So I think TDI prices are there on our site, which we have given, but for your benefit, I can give you for the quarter.
I just need the average prices for the years that have ended already.
So for the, if you are talking of the year, there has been an increase of around 41% in the TDI prices. So the prices in the year 2016-17 was around 193 rupees. And for the year 17-18, it has been 272 rupees.
Okay. And so my second question is on the price increases. As per your experience, are consumers resilient to price increases, or does it result in postponing demand or down trading? And how do we address this trend?
So I'd say it's obviously a very difficult balance that we have to do. And therefore, most of the time, the price increases will tend to be a little more prudent or a little more conservative on ensuring that the consumer just begins to postpone the purchases. I think we have done reasonably well in the past, where the price increases have really not sort of shooed the customer away. However, there have not been much of growth happening. And I think now the time is where the stability in the prices should be there and growth should happen. But in the immediate past, I think there has been postponement of purchases. And that's also because of the demonetization and GST. So it's been a mix of everything, all that, and plus the price increase.
Okay, sir. And my third question is on the, there are a lot of online products that have now come up on Amazon and, other places. Do you think the touch and feel factor is very important while buying a mattress, or consumers will actually look to buy stuff online?
So for a product like mattress, yes, you are quite right that a touch and feel is necessary. However, in my opening remarks, I did not mention that we have an online brand which we have just released or begun. It's called SleepX, and the product is catering to people who look at convenience and people who don't have time to go and buy and sort of move around and have, let's say, a certain faith on the company Sheela Foam and its major brand Sleepwell. The touch and feel part of it is somewhere addressed by giving them a few nights free, so that it comes to you, you feel it, and if you don't like it, we'll take it back. That's one. Second, it's also our intention to open some experience stores to go hand in hand with the online sales. So these experience stores would only book the material, but however will have material which you can go and see. So if there is a consumer who is very finicky, can actually go and experience it and still order it online, and we can supply that. But you're quite right that for items like this, people do want to cater to the touch and feel part. We do have some other ways to sort of change the feel a little bit, even when the person has purchased a mattress, been delivered, and suddenly finds that it's either too hard or too soft. We have ways and means to change that feel. So it's a new thing which is opening up. However, I would say that there would always should be enough market for the online material.
Thank you so much, sir.
Thank you. Next question is from Nihal Jam from Edelweiss.
Thank you for taking my question again, sir. Just want to check, what is the kind of sales that we're looking at for the Starlight brand in the coming year?
So I can give you, look, probably to discuss the target very specifically, but multiple times, closer to about 80 to 100 crores there.
Okay, sure. And just on the pricing increases, I do remember that last year in April we had taken a 7% price increase, and you just mentioned that we've taken a 5% price increase recently. In between, what are the price increases that we've taken?
Around 3% we have taken once more.
And when was that?
November.
Okay, sir. Sure, sir. Thank you so much.
Thank you. Next question is from G. Vivek from GS Investments. Please go ahead.
Yes, sir. Few queries, sir. Number one is the competition intensity increasing in Indian market with the advent of not many brands in both in online and physical mode. Number two, what is the value add we are getting from Australia subsidiary, and why no dividend? Third query.
So could you just repeat the question as the Australian part is concerned?
Yeah, what is the value add we are getting from our Australian subsidiary? Because not much is being contributed to the bottom line and either to the top line, and no dividend. And first query is clear about the competition increasing.
Yeah. So what there is no doubt that the competition intensity is increasing. Our experience is saying that because of the large unorganized sector that is there, all this added intensity is only growing the market and sort of pushing it from the unorganized to the organized at a quicker pace than it would have. Therefore, we do welcome this. As I said, that for at least many years, there is enough as long as the unorganized keeps shifting to the organized side. On the Australian, yes, last year the addition to the bottom line has been very little, and this is primarily on account of, again, the raw material prices, where we decided not to pass on the increase to the consumers, just so that the transference doesn't take place to another, or people start looking at alternate materials, or we open the space up for competitors. I think it was a good decision. Of course, we did sacrifice the bottom line, but as this year has begun and the prices have fallen, I think that was the right call. Generally, the bottom line has been about 6-7% for past many years. Last year has been lower on this account, but that was probably one of the years. Otherwise, it's a pretty metro market.
No, Australia is a small market, sir, and what is the value add publicly listed company like Sheela Foam is getting from our presence in Australian market, sir?
So there are 2-3 things, One is that there is a lot of synergy in the raw material purchase side. The suppliers are global people, and it just enhances our negotiating capabilities with those suppliers. Second is that as far as technical capabilities are concerned, and as far as market or consumer maturities are concerned, the Australian market is way ahead of the Indian market, and all kinds of products that get developed and that go to the market, we are ahead of that, and capabilities of absorbing that and introducing those products here. So that's a big plus that we have.
Okay, sir. And dividend नहीं दिया सर पर आपने?
वो मैंने बताया कि बोर्ड में बहुत डिस्कशन हुआ इसके बारे में, और and what we decided was that the the growth opportunity is so overwhelming that we must put all our might onto the growth path of it, whether inorganically or organically, and probably the returns would be far more to the shareholder. If the share price goes up, any kind of a dividend would have been very insignificant, even whatever we did, just because the share value is where it is. Or वैसे भी 85% तो promoters के पास में ही है. So we just said that we must go after the opportunities that are there for growth.
Okay. Coming to the opportunity side, what impact is this rural roads and lot of road construction? Is it having some positive impact? And lastly, about that Saudi plant of TDI, has it supplying, and what is the impact on TDI expected in future?
So the Saudi plant has started, the Sadara plant has started supplying to us, but it is still taking its time to ramp up to its full capabilities. And that's when I can build those numbers up when I was talking about the international capacities and the current capability too. But it is ramping up. We have already got a couple of consignments from them. Product is good and fine, and they are ramping up. And your first question was on the rural side, was it?
A lot of road construction happening. Any positive impact on our company?
Absolutely. Because foam and its products and mattresses are voluminous item, and they need to reach the consumer. Therefore, you need infrastructure, you need roads, you need trucking, you need to reach it right up to the consumer. If there was no road connectivity, it's very difficult to reach the product. And all this is helping that, foam and its products and mattresses to reach the consumers. In fact, I would urge you to read the latest Business Today, where they talk about these newer companies which have come to deliver even voluminous products like refrigerators and all. Now it's possible to be reaching them up to the consumers or up to the smallest of the remotest of the villages, just because the road and the other infrastructure exists.
Okay. Thank you.
Thank you. We'll take one last question. The last question is from the line of Pawan Kumar from Unifi Capital. Please go ahead.
So, regarding this TDI prices, so do we expect this particular 270 levels to gradually come down to 220 levels around a 2-year period, or what is the kind of outlook you have, at least visibility?
So as I said, just based on whatever inputs that we have, which is a little deeper understanding of the manufacturing capacities, the demand, and probably a little more understanding of the largest TDI market, which is China. We believe that the trend has already reversed. It is, and as I mentioned, that in this last part of the last quarter itself, or early part of this year, it has already started coming down to, or it has come down to 290, which is almost a 15% drop from a 335 level. So it's forecast, I won't say it's forecast, but it's hope, desire, any intelligent guess and prayers that it should come down quickly to a level of 225,
So China is a big player on the supply side?
It's on the supply side as well on the consumption side, and it's the biggest player.
What might be the proportion, roughly?
Sorry?
What might be the proportion of the demand and supply side being contributed by China, roughly, if you have any?
So I have some idea on that. So let's say the total global market is about 3 million tons. The Chinese market would be close to about 6,000 KT, which is about 1 million, about 1 million ton supply and 0.6 consumption.
Okay. And can you just give us an idea on how the sensitivity of TDI to the crude prices? Because the comments that I am hearing from the call is it is rather more of a demand-supply equation, and crude prices don't actually influence this much. Is that the right understanding?
That is the right understanding. So in very far past, the crude prices had some impact, but the crude prices, and there was always a lag between crude prices and the prices of TDI. But for the last couple of years, it's been only a supply-demand situation. These high prices that are there, whether crude is 60 or 80 or even 100, it doesn't matter. These prices are high on account of supply and demand. And that's what I said, that even if today the crude has gone up to $80, if we account for that, we account for 68 rupees to a dollar, still a good, healthy, remunerative price for suppliers should be around 225.
Okay, that's fine. That was from my end. Thanks.
Thank you very much. That was the last question. I would now like to hand the conference back to the management for any closing comments.
So thank you very much, Anand, for hosting this on behalf of ICICI. I would not want to repeat myself too much. I've made some opening remarks, and we've had a very good session of very pointed questions. And surely these are the questions which have been asked by the investors, but which also are on top of mind as far as we are concerned. Questions on TDI, its availability, it's coming to its kind of a normal price, the growth opportunities, how GST and demonetization are now kind of history. And again, as I repeat, I said that GST implementation may take a while. E-way bill may really may bloom in its full glory in a while. But people have found, commerce has found its way for the business to kind of go ahead, which is good for us. And the growth with the increased amount of promotion and advertisement on our part, and with capacities, fresh capacities that we intend to create, infrastructure, as one of my friends mentioned, that is reaching the nooks and corners. Growth has to happen and will happen. So with that, I just say thank you once again to all the people who participated and to Anand once again. Thank you very much.